Last week was our first playoff game, and my plaque psoriasis was so itchy under all my gear. Sometimes just thinking about scratching could take me out of the moment. And then my doctor told me I could get clearer skin with a pill called Otezla.
Otezla apremilast is a prescription medicine used to treat adult patients with plaque psoriasis for whom phototherapy or systemic therapy is appropriate. Otezla can help you get clearer skin after just 4 months.
Okay, ready for the next game. Talking to my doctor about a pill was a total game changer.
Don't use Otezla if you're allergic to it. Get medical help right away if you have trouble breathing or swallowing, swelling of the face, lips, tongue, throat, or arms. Severe diarrhea, nausea or vomiting, depression, suicidal thoughts, or weight loss can happen. Tell your doctor if any of these occur and if you have a history of depression or suicidal thoughts. Live in the moment. Ask your doctor about Otezla. Call 1-844-4-OTEZLA or visit Otezla.com for prescribing info about cost, and more.
Reality radio for a really great future. We're talking real money.
Hi, welcome to another edition of Talking Real Money Quick. I'm Don McDonald. This is the short version of Talking Real Money that I put together every week, which consists of, when we get them, your calls and questions, whether it's a call to 855-935-8255 or a question sent in through the Talking Real Money website. We will try to answer all of those on this podcast. Try. Can't promise, but we'll try. This week we got great calls. A couple of really, really good calls. And of course, I also edit in a bunch of the features that I create for Como News Radio in Seattle so that everybody in the country can hear those little bits of information. So if you have a financial, particularly an investing question that you'd like to ask, easy for me to say, 855-935-TALK is our phone number, 855-935-8255. That is not a trick to get you to call an advisor and become a client. All we do is send those calls to voicemail. I take the recording of the call. I put it into this podcast. I answer the question. And unless you ask for something else, you'll never hear from us again. Yes, I do now own an investment advisory firm, but we're not pushy. That's not what we do. We don't need to. So give me a call, 855-935-TALK. And remember, if you call 855-935-TALK between 3 and 5 p.m. Eastern on Saturdays, that's noon and 2 on the West Coast, you'll actually be on the live show that we do in Seattle. So you've got a couple of ways to participate. 855-935-8255. And I think it's a good time to get to our first call.
Hey, Don. So I was wondering if you guys could talk a little bit about reverse mortgages. When I was listening to the podcast recording of some of the retirement speakers, there was a guy on there who sounded like he was an insurance agent who was talking about like the objective of doing this reverse mortgage and taking this money out of your house to then put into your equity basket in some sort of like IRA or something like that you would utilize that for. And I was just wondering if you could talk a little bit more about the logistics of that, the pros and cons, like red flags to look out for, if there's like some insurance agent who's trying to sell you a product. Because I got to say, I got really excited after I listened to that podcast and I went to talk to my parents about it. And my mom nearly had an aneurysm about how this nearly ruined her friend's father's life and how bad they are and that they're a scam. And so I'm not sure what to think. Thanks.
Excellent question. And I got to tell you, several years ago, I would have joined your mother in that aneurysm session because reverse mortgages in the past were the Wild West, and they were crazy, and they were being sold by people who hadn't a clue what they were doing, and the fees were outrageous, and there were hidden clauses. There were all kinds of traps, and I can't remember in the old days, back in the old days, ever suggesting anyone get a reverse mortgage, even in the most dire of circumstances, because they were just such a mess. And your mom was right. People were getting scammed. That all changed a few years ago when the government got more intimately involved in FHA-backed reverse mortgages. They cleaned up the act, although still in private reverse mortgages, there's less protection. So let me just give you a little bit. I mean, to go through all of this would take more time than I like to spend on these podcasts. But reverse mortgages can certainly be a great way to fund a retirement for someone who is house rich and didn't really save a lot. They're really a decent alternative for those folks. They really are, because they've done some things. For example, it used to be that the origination fees could just run amok. And now the origination fees start at 2%, drop to 1%. This is for FHA reverse mortgages, and then are capped at $6,000. That's still a lot, but it's not as bad as it used to be. The other fees, the other downsides, I mean, you have to pay for mortgage insurance on a reverse mortgage, and the FHA just recently raised that to a 2% upfront charge on the total amount of the mortgage, the reverse. And also there's a 0.5% a year in in insurance fees. Plus, there are all sorts of other fees up front. There are appraisals and title, it's an expensive process, so it's not something that should be entered into lightly. And it is not something that's for everybody. Bear in mind, the guy you heard at Retire Meet is a guy who works for a reverse mortgage firm, and we thought it would be great to have him share information on them, but we don't agree with a lot of what these guys say. It is not the means by which to fund your investment portfolio, for example. The costs are high. The costs are really high. And so, again, I come back to they're a tool. They're a financial planning tool. They are not for everybody. The guys who sell them, of course, the guys and gals who sell them want you to think they're for everybody, because every time they sell one, despite what they say to the contrary, and as a matter of fact, one of these folks told us that they didn't get paid up front on these things, that they didn't get paid until the mortgage got paid off, which is a blatant lie. They get a commission up front. I don't know why people won't disclose their fees and commissions. I think they're embarrassed to talk about how much money they make. So, no, they are not for everybody. And your mom is right. They used to be horrible. Today, they're not nearly as bad. If somebody is in a situation where they do not have enough income to live comfortably in retirement and they have a house with a lot of equity in it, certainly they should consider a reverse mortgage. But don't just go to the first people you talk to. As with anything, shop around, get a complete breakdown of all the fees, and instead of just glancing at it, looking askance at it, read the darn stuff. But a great question. Thanks for calling. The number, 855-935-TALK. You can call that number 24 hours a day, 7 days a week, and we'll answer your questions every week on Talking Real Money Quick. Subscribe to free monthly email updates from the only magazine devoted to real investing, Real Investing Journal, at realinvestingjournal.com. What is the intrinsic value of gold? Probably less than most people think. It makes jewelry, it conducts electricity well, but what's it really worth? The answer is a question. What are you willing to pay for it? How much is a piece of land worth? Does it have an intrinsic value? What's the value of your home? Let's say you want your house to be worth $500,000. You place it on the market for that price. Months later, no one makes an offer. You complain no one is willing to give you what it's worth. You have the equation reversed. It's worth what someone else is willing to pay for it, not 1 penny more. How about stocks? What are they worth? This value equation is only a bit easier to determine because stocks represent ownership of a business. A business creates wealth by producing profits, so a stock is worth some multiple of the business's profit or earnings. There's value in those earnings, but the exact amount is open to negotiation. As for Bitcoin, seriously, how can you value nothing? Here's a simple way to understand the process of defining worth. Sellers can set prices, but only buyers determine value. Talking Real Money Quick continues. I'm Don McDonald. Thanks for being a part of this week's podcast. We did get some great calls this week, and if you'd like to call with your questions about money or investing or money and investing, give me a call, 855-935-TALK, 855-935-8255, and call that number anytime. Whenever you listen to this, you go, oh, I have a question. Or you're dealing with somebody in the financial industry and you go, let me get another opinion on that. Can I get back to you in a week or so? Give me a call at 855-935-TALK. Leave as detailed a question as possible, and I'll answer it the next week at the end, sometime in the middle of the next week. And then you'll know what you should do from there, or at least you'll have a better idea. Okay? 855-935-8255. Here's our next call.
Hi, Don. A question about financial independence and retiring earlier. FIRE, the movement is pretty popular, a little mustachian, but just your thoughts. I'd be interested in your thoughts on whether that fits with the globally diversified portfolio that you advocate, and how the two might be made to work together. Thanks.
I told you this week's calls are great. I don't think we've ever discussed FIRE. Not FIRE like the western part of the United States and Canada is experiencing, but this acronym. And okay, it's cute. It's a cute acronym: financial independence and retiring early. Okay, yeah, somewhat creative. It really doesn't mean much. It's a system that advocates doing something that I think is smart: paying off all your debt and then living a very frugal life. Well, I don't necessarily advocate it. I'm not against it. It's up to you. But living a massively frugal life in your late 20s, 30s, early 40s, maybe even into the 50s, to save and invest. And that is one of the key concepts of FIRE: to invest your money, to build the wealth you need to generate an income from your portfolio that will sustain you for the rest of your life, which is pretty much identical to what we've always espoused on this and other shows. Invest until it hurts. Save until it hurts. And invest until it feels good. Until you have enough money that you can withdraw 3, 4, 5% from your portfolio every year and live off of that. It's a great goal. It's hard to do in practice. And the mustachian thing, it's an inside joke. He refers to a blogger by the name of, who goes by the moniker of, he's got a big mustache, Mr. Money Mustache. And basically, Mr. Money Mustache's blogs and podcasts say, save as much as you can and go invest it at Vanguard. Does that sound at all familiar? I was Mr. Money Mustache before Mr. Money Mustache was Mr. Money Mustache. Except I don't wear a mustache well. I look stupid in a mustache, so I don't wear a mustache. But, and by the way, I'm going to FinCon in Orlando in September, and my goal is to meet Mr. Money Mustache, shake his hand, and tell him to just keep doing what Mr. Money Mustache does as long as he keeps recommending Vanguard. I think it's great. Yeah, it's a great idea. Save as much as you can and invest it properly. And as you know, that's what we tell folks to do on every single show / podcast. Invest, invest, and invest some more, and invest as aggressively as your risk profile both requires and allows. Pretty simple. So yeah, if you like to do it with FIRE, or if you just like to chill, either way works for me. So thanks so much for the call. And yeah, the two are complimentary. 855-935-TALK's our number right here on Talking Real Money Quick. If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm F.I.R.E at 800-386-3004 or visit us at F.I.R.E.com. Sell the sizzle is the mantra of financial sales trainers. Never mention the drawbacks of a product. Leave that to the disclosure documents. Few products, though, have a more unbalanced sales pitch than those for variable annuities. Here it is. Tax-deferred growth, guaranteed return of principal. The truth? Well, unlike regular mutual funds, variable annuities do offer tax deferral. However, when you start taking money out, those returns are taxed as regular income. In a regular old stock fund, you get some tax deferral, and your gains tend to be taxed as long-term capital gains at a much lower rate. As for the guarantee, yeah, if your investments are worth less than you invested and you die, your heirs get your initial investment. Those meager benefits don't come cheap. The average annual fee for mutual funds is around 1% per year, while the average annual fee charged by variable annuities is around 2.25%. Invest $100,000 in a variable annuity, and on average, you will pay about $1,250 more per year. A 50-year-old male could buy a $100,000 term life policy for less than $200 a year and get the same basic no-loss guarantee. You want to make a killing buying stocks, right? You knew that Apple would go from near bankruptcy to the biggest company in the world. You just neglected to buy the stock when it was really cheap. Sure, it always seems obvious in hindsight. Picking individual stocks is hard, and the odds are you have no idea how bad the odds of your winning really are. Stocks don't trade in an information vacuum. Whatever it is you know, everybody else already knows. You place an order to buy a stock, and like magic, someone has stock they're willing to sell you. Wait a minute. If the stock is good enough for you to buy, why is that other investor so willing to sell? Could they know something you don't? Odds are, since most trades are made by institutional money managers and mutual funds, they probably do. To consistently win picking individual stocks, you'd better be smarter than everyone else, have better information than everyone else, and move faster than everyone else. Odds are good you can't even be one of those, much less all three, so stop playing the stock market and just invest in the economy. That means owning a properly diversified portfolio for your risk profile. Subscribe to free monthly email updates from the only magazine devoted to real investing, Real Investing Journal, at realinvestingjournal.com. Most stock traders believe that for every winner, there's a loser. That sounds a lot like gambling. However, real investing relies on the steady growth of the global economy with occasional setbacks that are required to make it frightening enough to create that all-important risk premium. Investing can be tweaked to provide greater returns by taking more risk of volatility, or an investor can accept lower returns with less extreme variability. Active investing is a lot like gambling, where money managers believe they have some system that allows them to do the impossible, predict the future, or time the markets. For this perceived skill, they command a high fee. That fee means that even if they do manage to duplicate the returns of the market, they will net less for their investors. For an active fund manager to come out ahead, they need to not just match the market, but exceed it consistently. Investors who look for someone to beat the market are actually beating themselves and making money managers wealthy. Own the market/economy and let it grow. However, our emotions and behavioral biases make that a lot easier said than done. That was a good addition. I like that one. Thanks for being a part of it. And remember to call 855-935-TALK if you have questions. 24 hours a day, 7 days a week. We'll answer them on this podcast every week. And you know what? If we get too many calls in a week, maybe we'll split it into a couple of podcasts. That would be a wonderful problem to have. Give me a call, 855-935-8255, 24/7, and we will fit you into this podcast somehow. And this week's questions were just great. I'd be remiss if I did not mention the milestone that the Standard & Poor's 500 apparently hit this week. The Dow, according to some non-sticklers, hit a record for the longest bull market of 3,453 days long without a bear market. And a bear market, this is where there's some dispute, a bear market is a 20% decline in the market, which we're going to call the S&P 500 in this case because that's what they're doing. Now, where there is dispute is that the previous bull market record was between October of 1990 and March 2000. That 2000-2001 decline, if you round up, it was a 20% decline. But if you're exact and you decide that a bear market has to be exactly a 20% or greater decline, then the longest bull market in history was from December 1987 through 2008, which is 4,494 days. So is it an important milestone? Absolutely not. Is there anything you should do about it? Absolutely not. Should you invest any differently? No. How should you invest? How long have you listened? If you haven't listened long, okay. If you haven't listened long, I will give you the answer. How you should invest is in a way that's right for your risk tolerance. You don't speculate by trying to be in or out at the right time. You create a portfolio that's massively globally diversified, that has just the right mix of stocks and bonds for the worst case historical numbers we've ever seen. Still means you have to accept some risk. That goes with the territory. You don't make money without taking risk. So thank you once again for being a part of this edition of Talking Real Money Quick, the podcast. 855-935-TALK is the number. Call anytime. Please tell friends about the podcast. Please. The other thing, it helps so much, particularly through Apple Podcast, which is the giant in the podcast arena. If you subscribe, that helps. Telling other people helps a lot. But one of the biggest things that helps are those reviews. So take a minute, click a star, or write a little note if you like what you hear. Take care of yourselves. Thanks for being there. I'm Don McDonald.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by F.I.R.E, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.